Texas commercial truck insurance requirements. Unfortunately, truck accidents are more common than you don't expect, and the financial impact can be tremendous for victims. It's important to know how your rights affect truck accidents and the ways insurance companies try to avoid liability. The simple answer is trucking companies in Texas are required to have insurance coverage. The term full coverage does not exist. Instead, full coverage refers to a combination of coverage to protect a motor vehicle. The answer becomes more complicated because Texas trucking companies must abide by states and or federal insurance laws. The question to consider involve minimum coverage requirements, interest rates and interstate transport, commercial insurance coverage, insurance payouts, and the recent House 19 bill involving commercial motor vehicles. Learn about road accidents, management, and safety tips here. Minimum coverage. Trucking companies known as motor carriers are required by Texas law to file proof of commercial automobile liability insurance for each registered vehicle. The insurance requirements for truck drivers and trucking companies ensure they are covered in the event of a serious accident or injury. In Texas, trucking insurance providers will ask three key questions to help determine the most appropriate truck insurance and liability limits. How much does how much does the truck weigh? Where will the truck travel? What will the truck transport? All drivers, including commercial drivers, must carry at least the following coverage: $30,000 bodily injury coverage per injured person, $60,000 bodily injury coverage total per accident, $50,000 property damage liability coverage. If the operator fails to provide a proper proof of insurance, an investigation could follow. This investigation can include inspection of all company trucks, inspection of all company vehicles, audit of all vehicle and driving records, interstate and interstate transport. The amount of truck insurance for interstates is set by the Texas Department of Insurance (TDI). It sets the minimum amount of commercial insurance coverage at $5 million. The Federal Motor Carrier Safety Administration (FMCSA) sets the law regarding how much coverage is needed by a Texas trucking company. The amount of coverage depends on the weight of the commercial truck and type of materials they transport. $750 million is coverage when carrying non-hazardous materials and weighing more than 10,001 pounds. 1 million for trucks transporting oil, hopper type vehicles of cargo from or to Texas to another states. 5 million for trucks carrying hazardous material. FMCSA requires that all commercial trucks under its auspice prove financial responsibility by one of the following methods: purchase liability insurance, purchase a surety bond. FMCSA also requires that proof of insurance be kept in two places: in the vehicle itself and in the carrier's office. These documents can serve as proof of insurance. Form MCS 90 proof insurance issued by the carrier. Form MCS 82 proof of an existing surety bond. Commercial insurance coverage. In addition to the minimum insurance a trucking company must carry, it can obtain additional insurance coverage. The four main types of commercial insurance coverage are: generally liability insurance. The minimum coverage requirements extended. Liability insurance offers more than the minimum coverage. Eroding policy allows trucking companies to subtract cost of defense from coverage. Self-insured retention policy adds $250 million to trucking company insurance policy. Trucking companies must also have accidental insurance coverage or workers' compensation coverage for their employees. Coverage must be at least $33 million for medical expenses of a minimum of 104 weeks, $1 million for accident, death, and dismemberment, including 70% of an employee's pre-injury income for at least 104 weeks. when compensation of loss of income $5 million, $500 minimum maximum weekly benefit.